Hi everyone, welcome to the Emergence Investment Conference, and we are here today with Leeor Groen, the Managing Director at Spartan Group, Asia's leading digital asset management and investment banking firm in the blockchain industry. Leeor, thank you for being here.
Pleasure to be here. Thank you.
Now, Leon, to kick things off, could you share with us some of the most significant digital asset investment trends that you have observed recently, especially in the context of the global market?
Yeah, with pleasure. I think it's exciting times in the industry. I mean, we're speaking now at the end of February in the midst of what is a very engaged market, let's call it. So we're reaching all-time highs on many of the tokens and crypto digital assets. So I think the real context in which this is happening is, I guess, what many would call the catalyst from the ETF approval, Bitcoin ETF approval, which came through just last month at the beginning of the year, which I think has, for many people, solidified the asset class as an institutional grade asset class, which has enabled a whole wave of different pools of capital to engage with the space. So, from a market which has traditionally been very retail focused, speculator heavy, we're now seeing an increasing engagement of many tier one institutional global brands, not only getting engaged in issuing their own ETFs, but of course across a diversity of their own managed accounts, managed funds, really doubling down and bringing their clients in on this journey with them. So I think at the moment, one of the biggest Bitcoin bulls in the world is Larry Fink of BlackRock, going around and obviously preparing for a case where he sees a lot of engagement and market participation from one of the largest asset managers in the world. So we're very excited about how all of that is playing out, and we're certainly, as digital native and crypto native participants in the market, very excited about the prospects and what we're heading into and what we now consider the next cycle of the industry, with the Bitcoin halving coming up in the next few months and a lot more things, let's say, on the roadmap for us.
Amazing. That all sounds very exciting indeed. Now, as a managing director at Spartan Group, you have a wealth of experience in deal making and investing in the blockchain industry. So what are some key factors that investors should consider when they're navigating this rapidly evolving landscape?
Yeah, so I think the first thing to remember is investing is different from speculating, and this market has lent itself uniquely to both. And I mean, not acknowledging that, I think, is also a fatal flaw that many people who come buy at the peak of the bull market when everyone's excited, and then sell when they see some depreciation of their investments, and then feel disenfranchised. So I think that's a fundamentally different discipline to what some of us longer term market participants have gone through and how we approach the market. So I mean, we started Spartan Group in 2017, launched our first fund in 2018, and really over that period have gone through multiple cycles. And I think for us, the recognition is that we have a long-term high conviction in this space, in this sector, and in the underlying assets that it presents. And that is not something that you trade in and out of based on the latest news that you might come across on any given day. It's really about building fundamental belief and conviction, and then doubling down on those positions when the market is attractive and offers itself, an opportunity to come in. And that's how we've looked at this. I mean, over the last 18 months, the market has been relatively subdued in terms of activity, and prices throughout most of 2023 were not as attractive or engaging. For those of us who are in the industry with the mandate to invest in across the cycle, this is when it's most interesting for us. So we have spent a lot of the last 18 months doubling down on and building positions in assets that we have high conviction on, and now we're really starting to see that. And I think that's kind of the takeaway for how we speak to our investors always is, think of this as the long-term play, and you're managing kind of a levelized cost of entry, so dollar cost averaging your position into a market over a period of time. And that isn't in the space of 2 or 3 weeks. That should be across multiple years in terms of horizon and building up positions of assets in the space.
Amazing. That sounds great. Now, speaking of challenges, we often hear about the volatility and regulatory changes that are surrounding digital assets. So how do you see these factors actually shaping the future of digital asset investments, and what strategies would you recommend for managing associated risks?
Yeah. Look, I think the regulatory topic has always been, let's say, the key cornerstone of the uncertainty that this sector provides, which for us, given that we are a global setup, I mean, we're a manager based out of Asia, so our offices are in Singapore and Hong Kong. our focus has always been to focus on local regulations in the context of obviously global regulations. And we've been very excited about a lot of the leadership and developments that the local market regulators in Hong Kong and Singapore specifically have taken to give a level of confidence in the work that we're doing. Increasingly, though, the elephant in the room is always, what is the SEC doing? And I think from one hand, the decision to go ahead and approve the Bitcoin ETF, that alone was a monumental shift, and with the catalyst that then allows for further other types of ETFs. For example, there's a lot of discussion at the moment around the ETH, so the Ethereum ETF coming through, and these are the types of opportunities that we see now that one has been approved. What comes next? And we saw a similar thing when Coinbase filed for its IPO and got its SEC clearance and approval to list on NASDAQ. It was a similar story. I think that then lent itself credibility for other companies to follow suit and continue to do that. And there's still a very small universe of publicly listed equity businesses, but we see, recently in the news, Circle, so the issuer of the USDC stablecoin, the largest, let's say, regulated stablecoin in the world, they have announced their plans and applied for their IPO filing in the US as well. So we're seeing this convergence of global market leaders coming together, operating global businesses, but still looking to list and get that SEC approval, US tier 1 capital market listing squared away. And that gives us a lot of confidence in what comes next. And that's kind of where we're excited about.
Amazing. That's great. Now, certainly managing risk is very crucial. So, given your international experience across various regions, how do you perceive the differences in digital asset investment trends and regulatory environments, and what implications do these differences have for investors that are looking to diversify globally?
Yeah. And I think this goes in the same direction, really, of understanding what regulators are saying and why they're saying them.
Right.
And I think not overlooking, I guess, where the industry's come from. And we've had a lot of unregulated market participants doing and engaging in unregulated activities, which has resulted in, lawsuits and class actions against them. And this is a very natural part of a process in the early stage of an industry until the laws and the rules can follow and support that, right? And I think for us, what we see now, especially last year with CZ, so the founder of Binance, and Binance cutting a deal also in the US, we see that now over the next cycle, so the next few years now, an increasing number of market participants are working towards that regulated path themselves, and increasingly will be the ones driving this industry forward. So from the perspective of regulations, we've never considered them more important as they are today, just given a lot of the, let's say, implosions that happened in the last industry and the things that hurt, be it from Celsius, from Terra Luna to FTX, which is probably the best known case. A lot of those situations arose from poor governance and internal problems rather than technological failure or market behavior failure. It was internal governance matters. And that's where you really see the need for regulations to protect ultimately retail investors. And that's why when we approach the market, for us, we always look to work with regulated counterparties. And when we can't, we make sure that we understand who we're dealing with and why we can't. And ultimately, I think that key element there is being aware of the risks that you're taking at any point in time. And I think for us as professionals in the industry, we have a inside view of that, whereas people who are perhaps logging in and speculating on tokens and assets from their computer at home with no real direct access to the counterparties that they're dealing with, it's a fundamentally different thing. And that's why I guess as we see this going forward, we expect additional information and disclosures to happen from the way that token issuers are engaging with market behavior, like public companies do with their shareholders, and we're excited about what all of that brings in terms of opportunity for a more mature and sophisticated market, which we're very excited about because we're here for the technology and we want to see it adopted in the right way, and we want to bring everyone on that journey with us.
Amazing. Well, that is great, Leeor. It's very insightful, everything that you've shared. Now, before we wrap up our interview, could you share any key takeaways being here today at the Emergence Investment Conference, just about your overall experience?
Absolutely. No, so I'm here in Sydney. It's my third time at an Emergence event and always a great crowd. So I appreciate the work that WI and Chris put into organizing it. I think at the end of the day, a lot of entrepreneurs here who are building their businesses, not just in the digital asset space, but across the tech sector generally. obviously very innovative companies coming together. So it's great to have the opportunity to meet them and really have a sit-down opportunity of face-to-face meetings here in Sydney. So great to be here, and thank you for having us.
Amazing. Well, thank you so much, Leeor, for sharing your expertise and insights with us today. And to our viewers, thank you so much for joining me, and I look forward to seeing you all in my next interview. Thank you.